It's Wednesday, October 4th, 2023. Markets across the board up today. It's shocking, almost amazing. Looking at the markets up today, when you look at the multiple strikes across the U.S., you look at what just happened to the Speaker of the House, and just the complete, really, mismanagement of the entire country, the massive debt, the massive deficits. It's amazing to look at these markets today and see that they're up. This is how you know that this is all fake and it's extremely manipulated. But much of what we see is very fake and very manipulated. The economiccollapse.com had a very interesting article today I was reading. It's titled, "We have reached the terminal phase of the greatest debt spiral in the history of the human race." And that is very, very true. You know, when you look around and you see people, you know, eating out at very nice restaurants, they're driving beautiful cars, they're wearing beautiful jewelry and beautiful watches, they're living in beautiful homes. Much of this is based on debt. Just like the $34 trillion of U.S. debt now, well, almost $34 trillion of U.S. debt, we've added $2 trillion of this national debt just in the last 3 months. We continue to spend, we continue to act like we're the most powerful, wealthiest nation on planet Earth when we're spending money we don't have. And it's just like the people around us eating at the nice restaurants and driving the beautiful cars and wearing the beautiful clothes and the beautiful jewelry and the beautiful homes. But how much of it do they actually really own? How much of it is financed? And what's going to happen to all these beautiful people and beautiful homes, beautiful pieces of jewelry, beautiful cars when people cannot make the payments? And that unfortunately has begun. There's a reason why the repo man is so busy right now. 30,000 cars are being repossessed a day, not a month, a day in the United States of America. Why is that? Because people are not making the payments. And this is going to be happening in the housing market. And when it does, I think it is going to dwarf what we saw in 2008. But regarding this $34 trillion of U.S. debt, they may be able to extend this party a little longer. But we are now in the terminal phase of this debt cycle, as this article says. Bond yields have reached alarming levels. Governments around the world will soon be facing enormous problems, and so will the citizens of these countries. And I really, truly believe that America is probably going to feel more pain than many countries in the world. And we're going to be blamed for this disaster. We've manipulated the US dollar. We used it as a weapon. It's been weaponized. And we've caused this massive amount of inflation throughout the globe because of the printing presses and the manipulation of the dollar. And a lot of countries, especially emerging markets, are paying a very, very severe price here. And there's a lot of people that are not too happy with us. And I think that we're going to feel extreme pain here, and I think we're going to be blamed for what we've caused. So prepare for that, ladies and gentlemen. You know, a lot of people talk about how they're just going to leave America and go somewhere else. And when we talk to Bill Holter, he says that may not be a great idea. You know, coming from America, going somewhere else, people, number one, are going to think you have money, you will be a target. Number two, you are an American. You caused this global depression, this global collapse. Whether we've caused it or not, more than likely, I would say we're going to take the blame for it, and we are highly responsible for this collapse. We really, in my opinion, probably did more damage globally than any other nation by the weaponization of the US dollar, the printing of the US dollar, causing all of this inflation. So the rest of the world is going to pay the price here too. And if you're an American living maybe in a third world country, you may be a target. So be very, very careful with that. CNBC. More mortgage applications are being rejected for insufficient income. Nearly 25% of refinance applications were rejected in 2022. That is up sharply from the 14.2% in 2021. 9.1% of home purchase applications among all applications were denied in 2022. What will the numbers look like for 2023? I'm sure they're going to be much bigger than the numbers in 2022. As the average monthly cost of a mortgage payment increases, more people are going to be denied. There are less people that are going to be able to qualify as mortgage payments continue to rise. That means that, that you're going to have to make more money in order to meet those mortgage payments. And how many people's income is actually going up now, or going up at the rate of these mortgage payments? Not many. Most people, according to this article, are being denied for a mortgage because of insufficient income. They're not making enough. Now, if they were making this money 2 years ago, they have no problem. But take a look today at bankrate.com. 30-year mortgage rate, 7.88%. That is literally almost 3 times what some people paid a couple years ago for a mortgage. That is literally almost up 3 times. So what you were making a couple years ago, might have bought you a very, very nice house. You could afford the monthly payment. But fast forward today at almost 8%, you can't even afford the house now. You won't even get approved for the same house. So it's going to be very interesting to see how high these mortgage rates go, because I'm anticipating that they're going to go much higher. I do believe that we're going to see people paying over 10% for a 30-year. Here's another one today from CNBC. Mortgage demand drops to the lowest level since 1996 as interest rates head towards 8%. As I just said, bank rate headed at 7.88% for a 30-year. Applicants to refinance a home loan dropped 7% for the week, 11% lower than a year ago. Applications for a mortgage to purchase a house fell 6% for the week and were down 22% compared to a year ago. That is an astronomical number when you think about it, that applications are down 22% from a year ago. Adjustable rate mortgages made up 8% of purchase agreements, up 6.7% from a month ago. This is extremely dangerous, and this is how desperate some people are getting now, that they're resorting back to an adjustable rate mortgage. You know what happened back in 2008. Anybody doing this is playing a very, very dangerous game here. I would stay away from adjustable rates right now because, in my opinion only, I could be very, very wrong here, but I do believe that rates are going to go up. And what are these people going to do? They're hoping that rates are going to go down, but what happens if rates go up and you're holding an adjustable rate mortgage? What's going to happen to these people? Very, very dangerous game they're playing here. I highly advise against it. I highly advise right now to not make any big ticket purchases. I would not buy a house, period, at this point, unless you really, really had to. Obviously, if you sold your house today and you bought a house down the street, it's all relative. I understand that. But if there's any way you did sell and you could just maybe rent for a year and just sit on the sidelines, I think that that's what the smart money is doing right now. I think this is the worst possible time to buy a house, probably the best possible time to sell a house. Unfortunately, many people waited too long or they were too greedy, and now they cannot find a buyer for their homes. I'm looking in the southern part of the country every day, multiple times a day. More and more homes are coming on the market. Many more are better priced, but they're still overpriced. But I'm seeing more realistic type numbers coming on. I'm seeing more price reductions every day. But what does this look like 6 months to 12 months from now? It's going to be a whole different game. And think about, if you're holding on to some cash right now, you can pay cash for a house, or you can put a very healthy down payment down. Yes, mortgage rates, in my opinion, are going up, but prices are going to come down. And how far down are they going to come? I don't know, but I think that they're going to come down a lot, because I still believe that we're going to see a massive collapse in housing. And it's shocking how many sellers right now are unaware of what's going on. They believe that this is still 2021, and they have no clue what is happening, and they're costing themselves money every day by thinking they're going to get the price of this home that they're listing it for right now. It's not going to happen. And what they don't understand is you have way less qualified buyers in the market now that can afford these homes. So until people wake up and begin to drop prices significantly, they're going to be sitting a long time. So they can pay for the insurance, they can pay on the mortgages, they can pay for the upkeep of these homes, and they can sit on these homes for as long as they want. But at some point, and at some time, people, sellers, at some point may have to sell. Some people can hold out. Some people don't, probably even have to sell their home. But there are people out there that are going to come to a point where they're going to be forced to sell, that they can no longer afford to carry this house. Maybe it's a vacation home, maybe it's an Airbnb, maybe it's a house they inherited. They can no longer continue to pay on a house that they're not using. They can't rent it. So there's a lot of factors that go into this, but unfortunately for a lot of sellers, it is too late. They're not going to get the number they thought they were going to get. Those days are long gone. So if you're a seller, I would make sure that I'm using a very seasoned, very honest real estate agent that really knows and is honest with you and themselves with what is happening in this market and what is going to happen in this market. It does not take a rocket scientist to connect the dots here and know where this is all going. You have less qualified buyers. You have inflation running out of control. You have people losing jobs. You have major strikes going on. We don't even know who's leading the country at this point. Mortgage rates going up, inflation going up, and it's just a complete recipe for disaster. And the smart sellers are going to discount prices just like the home builders have been doing. They're going to cut bait, they're going to discount prices, throw in incentives, and they are going to dump these houses. And if you're a seller right now and you've been sitting for more than 30 days, guess why? You're overpriced. Talk to your agent, get real. You're probably going to have to discount the price of that property significantly to sell it now. Otherwise, you hold it for the next year, maybe you hold it for 2 years, maybe you hold it for 3 years. And how much is that going to cost? So something to think about. 1 in 8 U.S. households saw a drop in income last month. This is going to be another problem for home sellers. When you have 1 in 8 households having a drop in their income, half this country right now, believe it or not, is working part-time jobs. Half this country right now is working part-time jobs, multiple jobs, 2, 3 jobs. They did a poll in this article, and it pointed to a slowdown in business activity. And it says the share of workers who reported working over 35 hours fell to 46.7%. So more than likely, half this country is not even working 40 hours a week unless they're working multiple jobs. That's the only way they can do it. And so how in the world, think about this for a minute, when you see what's happening with the strikes, the leadership in this country, inflation, mortgage rates, savings rate, the repayment now of the college student loan debt, the amount of businesses we're seeing close, it just goes on and on and on. How in the world are we going to sustain this housing market, especially when you have people spending over 40% of their income on a mortgage payment. How long can you sustain this? People are living, you've got 63 to 70% of this country living paycheck to paycheck. How in the world do you sustain this? Again, what is real and what is fake? What is the illusion? Everything now seems to be an illusion in this country. And people are walking around in the delusion. It is a complete Twilight Zone, ladies and gentlemen. It is a complete Twilight Zone. You have so many people that bought houses just to be short-term renters, to be real estate moguls now, buying 3, 4, 5, 7, 8 houses. And now many of these people are in big trouble. You know some of these people. I know some of these people. We're going to have multiple crises on our hands, ladies and gentlemen. It's not going to just be housing. Look what's happening in the bond market. Stock market is a ticking time bomb. You look at, again, the repossession in the auto market now, student repayment, $1.7 trillion of debt. People don't know how they're going to eat now because they've got to pay back their debts. What impact is this going to have on the economy? It's going to have a huge impact on the economy. We have so many problems. Then we talk about what's happening with World War, and we have many, many people coming over to the country now who are going to need health services, they're going to need food, they're going to need housing, and they're going to need jobs. So I don't know where all this is going, but I don't think it's heading in a very positive direction. Here's one from MarketWatch. Banks are bracing for a recession as Treasury yields surge. Amazing. They got Treasury yields now. The 10-year was about 4.73 today. So they brought it down, what, about 8 basis points? Who's buying this? You know who's buying this. It's the Fed. That's who's buying it. So you still have the Fed playing a game here, buying bonds and raising rates over here, buying bonds, while the U.S. government is spending money like a drunken sailor. So how in the world are we ever going to get back to 2% when you still have the Fed in here buying in these markets, the U.S. government spending trillions of dollars, and the Fed raising interest rates? How in the world are we going to get to 2%, let alone even see inflation, real inflation, go down? This is why prices of everything continue to go up. And they're in big trouble here because they're raising interest rates and inflation is still going up. And they know if they stop raising rates, inflation is going to continue to go up. So we're in big trouble. I'm going to leave it at that. We're in very, very big trouble. Nothing is standing in the way of higher Treasury yields, says Schwab's Kathy Jones. This is not good for banks. The rise in yields has been relentless, and I do believe we are going to blow past 5%. Banks are holding a large exposure to commercial property loans that could be difficult to refinance if rates stay higher for longer. They're not going to just stay higher for longer, they're going up. Lenders are bracing for credit deterioration and losses to climb in the event of a recession. Ladies and gentlemen, we're in a recession and they know it, and they're bracing for impact right now. They know that people are going to continue to default on the credit cards. They're going to continue to default on the auto loans. They're going to be defaulting on the mortgages here very, very soon. Banks are exposed right now to $558 billion of unrealized losses in the second quarter alone. And they know that more is coming. So brace for impact, ladies and gentlemen. Brace for impact, because that's what they're doing. They're getting ready. They know that more and more defaults are coming. And of course, they're going to want you and I to bail them out. Here's another one today from the hedge. 75,000 Kaiser Permanente workers go on strike in largest healthcare labor action in U.S. history. This is 40% of Kaiser's staff. People in the emergency department techs, radiology techs, x-ray techs, medical assistants, and many other positions. The risk of another strike now is also brewing in Las Vegas. People working in the hospitality industry, up to 50,000 people working in the hospitality industry in Las Vegas could go on strike. So we have the automakers on strike. there was talk of the dock workers in Los Angeles going on strike, Kaiser's on strike, everybody's going on strike. And that means that more than likely they're going to get a pay increase. And that means that you're going to be paying more for, you know, your health coverage. You go to an urgent care, you're going to pay more. You buy a new car, you're going to be paying more because they're going to have to pay these people more money in order to stay open. And so, again, what they believe is the answer to fighting inflation is just pay people more money, but that's going to cause more inflation. And then many people, when I watch the television, these people wearing $3,000 suits, they're just begging the Fed at this point to reverse course, begin to lower interest rates and print money. Isn't that what caused the inflation to begin with? How is that going to fix anything other than cause more inflation by reverting back to what caused it? Lowering rates and printing money. It's the people at the very, very top that want this to happen. And then they're going to force so much pain on everybody that everybody will be begging at some point when the Fed begins to break things to reverse course, print money, and bring relief to these markets. But it's going to do the opposite. It's going to cause hyperinflation. Nobody wants to feel the pain. People just believe like, well, if we raise rates, maybe it'll be a rough year. No, we've printed so much money and caused so much destruction to the economy. You know, when you inject $7 trillion and just give people stimulus checks and tell them to stay at home and not work, everybody enjoyed that time. But now nobody wants to pay the price. See, there's no such thing as a free lunch. And now having this inflation, having to raise interest rates, people are now feeling the pain. And so it's just easier to reverse course and go back to free money, and printing money and low rates and cheap money. It's easy to do that. But then you're going to continue to devalue the US dollar. You're going to cause more inflation. And again, nobody wants to feel the pain. Nobody wants to stop spending. The US household is addicted to spending. The US government is addicted to spending. So I don't see any of this getting fixed anytime soon because we have a spending addiction in the United States of America. From the households to the political parties, this country cannot stop spending. And as long as it continues spending money, it does not have. Households with credit cards and the US government with a printing press. We're going to see more and more inflation. We're going to see more of the middle class decimated. We're going to see more of our poor people homeless and going very, very hungry. We're going to see less opportunity, and we're going to see a bigger wealth gap here in America. See, the wealthy people, they took the funny money, they took the monopoly money, and they went out and bought real assets. They bought homes, they bought property and real estate and land and ranches and agricultural properties and all types of farms. They bought companies, they bought income-producing properties, they bought art, they bought solid physical gold, they bought these types of things. While the average American took their money, their crumbs, went out and bought a big screen TV or a Dodge Charger, that's what they did. And this is why we're in so much trouble, and the average person is completely broke now, and they're going to beg the system for help, and the system is not going to be there to help them. This is why so many more people are going to go from middle class to poor and poor to homeless. Recession warning. I'm going to close with this last article. Key triggers are all in play right now. This on the hedge. This was identified by Deutsche Bank. Number one, an inflation spike. Okay, these are the recession warning signs. We're already in the recession. Price inflation is at a 4-decade high. Two, inverted yield curve. The U.S. Treasury yield curve has been inverted since July of 2022. Three, rapid rise in interest rates. The Fed has raised rates by over 5% in just 18 months. And the last one, oil prices. Oil prices have spiked over 25% in the last 12 months. Think about this, ladies and gentlemen, and think about how you can protect yourself and what you need to do right now in order to protect your wealth. It's great if you can make more money. That's a great thing right now. Make as much money as you can and stack as much capital as you can. Buy real assets right now, but protect the money that you have right now. Try to make more money and protect as much of it as you can. Prices are going up. Tough times are coming to America. If you think things are bad now, wait till you see what this country looks like in 2024. Have a good day. God bless.